Okay, friends, today we are continuing our risk management theme of behavioral risk management. Today is week 3, where we're going over behavioral finance and risk aversion. Last week we covered managing emotional responses to the market risk. And week 1, we went over the psychology of risk in trading. So today is going to be broken down into 2 parts, like usual. Part 1 is going to be behavioral finance concepts affecting risk tolerance, and I'll explain what behavioral finance is in a moment. And part 2 is strategies for making rational risk decisions under pressure. So a lot of practical stuff here. My goal with these lessons is to provide you guys with concise and actionable protocols that you guys can take in a quick lesson and apply directly to your trading or outside of your trading in your general life, just to benefit you. That's what we are all about here. It's not just about making money, though that's a big part of it. We do care about you as a person. So if you guys have any questions during the lesson, remember this is a classroom. It's not just me talking at you guys through a camera. Feel free to stop me at any time in the chat. Just say, hey, can you elaborate on that? Hey, I have a question about this. I encourage that. So if you're new, especially, please shoot out in the chat. Tell me to slow down or speed up or whatever you need to do. So I won't waste any more of your time in the intro. Let's dive into it. Behavioral finance concepts affecting risk tolerance. So what is behavioral finance? Behavioral finance is a field of study that explores how psychological influences and biases affect the financial behaviors of individuals and markets. So essentially, it's how you make financial decisions based on your psychology and everything surrounding your psychology. So it's a pretty broad term, but it's very prevalent in what we do on a day-to-day basis, at least for us who are full-time traders. It is something that will affect you if you're not paying attention to it. So this part 1 has 3 subcategories that we will go over quickly. The first subcategory is prospect theory, which is pretty interesting, anchoring, and herd behavior. Again, going over the general theme of behavioral finance. So how do all these things affect our psychology when it comes to trading? Check the chat, make sure we're still doing good. All right, cool. T-Bull, great. TE now Team Bull brought to eternal exchange. Oh yeah, the big transition. Yeah, I was surprised, Danny. I did not envision him getting out of his whole thing, but interesting stuff nonetheless. All right, let's jump into it, folks. Prospect theory. So prospect theory describes how people make decisions based on perceived gains and losses instead of actual gains and losses. So it suggests that people are more sensitive to losses than to equivalent gains, leading to irrational risk-taking and risk aversion. And I'll get into how this affects us in a moment. So this theory explains loss aversion, where investors might avoid taking risks even when there is a chance for greater reward, or conversely, take irrational risks to avoid certain losses. So for example, a trader may be unwilling to sell a stock at a loss due to the emotional pain associated with locking in that loss, even when selling might be the best strategic decision. So whether that exact example has applied to you, I'm sure if you've been a trader for any amount of time, this loss aversion has negatively affected you in some way or another. This idea of the prospect theory, how our perceived gains and losses are really affecting us. And a really good strategy to avoid being emotionally attached to a specific trade is to take a broader perspective, step back and say, hey, I am actually expecting to lose when my overall gain is $5,000 in 2 months or whatever it might be. I'm expecting to have losing days and losing trades. So if you're able to put yourself in that headspace while those emotions are rising up, while you guys are in the trade, in the thick of it, taking a step back and be like, okay, this one seems like it's going to be a loser. I'm not going to try to revenge trade. I'm not going to scale up to try to make those gains back. What I'm going to do is accept that loss and wait and plan only according to my risk management plan and my trading strategy. I'm not going to just jump into something off an emotional response. So I encourage you guys to take that broader step back, open up your perspective a little bit, and understand that truly losses are part of the game. And I know that sounds so fundamental and basic and cliche, but it is so true. And many of us, when we're in the trade, it's really hard for us to step back and be like, oh, well, today's a losing day, or this trade's a losing trade. That's part of the game. I'm just going to move on analytically without letting my emotions really affect how I'm making decisions. So that's kind of the prospect theory, how our perceived ideas of losses and gains really are affecting us, rather than looking at our analytical losses and gains and the factual evidence. So moving on to anchoring. So anchoring is a tendency to heavily rely on the first piece of information encountered, which would be the anchor, when making decisions. So investors may anchor their expectations of a stock's value to its previous high, rather than current market conditions, influencing their risk tolerance and leading to poor decision making. So, for example, if a stock was once valued at $100 and it has since dropped to $60, a lot of people might look at that initial piece of information, that anchor, and say, you know what, I'm going to hold on to this because I believe that it's going to go back to that $100 mark. Even though market conditions and all this other information is telling us, hey, market trends are showing us that it is going to continue to downfall, even though it might have a little run up in a moment. So when it comes to anchoring on a day trading level, you just really need to be paying attention to, one, the fundamental news. We do a good job, I believe, here at Eternal Exchange of providing you guys with news and keeping you updated. But it's also, we can, lead a horse to water, but we can't force it to drink. You guys really have to be paying attention to the fundamental aspect, the geopolitical things. The presidential debate is 35 days away? We're coming up pretty quick. So what you guys really need to do is pay attention to what's going on in a broader time, or a broader theme surrounding the markets. And then on a technical level, a technical analysis, looking on how the actual market is performing right now. Is it a range day, and we should not hold our anchors per se, to the recent highs or the weekly highs or the daily highs, whatever it might be. So just what I brought up the anchor idea because, one, it affects a lot of people, but also to give you guys some perspective on the idea that we are not, or we should not, just place all our money on things that have worked in the past and things that we may expect to happen without looking at the broader picture, if that makes sense. I don't know if I articulated that the best way, but the anchor is something that affects a lot of traders, and I've seen it in my own life and in my own trading, and I've seen it in tons of students as well. So just be mindful that, just because something has worked in the past, look at the broader picture. And then moving on to our last part of part one, herd behavior. This is something that affects every single person, whether it's in the stock market or outside of it, whether you are fighting against it or going with the flow. Herd behavior is very common for all humans and animals alike. So herd behavior refers to the tendency of individuals to mimic the actions of a larger group that they may be a part of, particularly in volatile situations due to the fear of missing out, or FOMO. I think all of us are familiar with that feeling, or perceived safety in numbers. This often leads to impulsive decisions without individual analysis of risk, such as buying overvalued assets during market bubbles. So, for example, GameStop. I think that was a really, or AMC, those are really good examples of herd behavior. It worked for a lot of people, but on a day-to-day level, what herd behavior may mean for you is you're paying attention to the markets, you're still kind of figuring out what you want to do, and maybe you're in a Discord group like this one and you're following Trader Joe's trades or any other group that you may be a part of, someone who's sending signals, and everybody in the chat may be saying, or in the comments, whatever it might be, saying like, hey, I'm jumping in, I'm going in long right now. And you, without looking at your risk management plan, not having a preconditioned rules for yourself at where you're planning on getting in, where you're planning on getting out, your lot size, how many ticks your stop loss is going to be, whatever that might be, you don't have that in place yet. And because everybody's getting in, you just jump into it without taking your own risk management into account. And then all of a sudden you're like, holy crap, I really over leveraged that. My lot size was right, but where I got in, a proper stop loss wasn't until 120 ticks away, or 75, or whatever that might be for you. But I really, really do encourage you, and I see this all the time, where people have everything on their own is going really well. Their trading strategy is winning, 65% of the time, and they're only shooting for 2-to-1, 3-to-1 risk to rewards. Everything's set up properly. Their risk management's on point. They know they can afford to get X amount of prop firms a month or whatever it might be. Everything's on point. And then I see them jump into a trade because everybody else is, and all of a sudden they're over leveraged, and then it's just a downhill spiral. A lot of people, when they mess up, emotions get involved, like, man, I can't believe I just did that. Like, I need to make that money back that I just lost because of something stupid. And then you'll over leverage, start to revenge trade, and it's just this vicious cycle. So be aware of this idea of herd behavior and really make sure, even if Trader Joe is like telling you, you got to get in the market right now. Well, take a moment, really just take a breath. If you miss it, it's okay. Look at the risk management plan, be like, okay, I'm going to get in with 4 lots. My stop loss is going to be 65 ticks away, and I'm shooting for a 2.5-to-1 risk to reward ratio, and I'm not going to pull profits until then. Cool. Then you jump into the trade. But if you cannot even set those basic rules out for yourself, do yourself a favor, don't get into that trade. And if you don't, you should be proud of yourself for, controlling those emotions and not jumping into it. Okay, that's part 1, folks. Is everybody still with me? Everybody's, we're making sense. We're drinking water. We're doing the healthy thing. All right, we went over prospect theory, anchoring, and herd behavior. If you guys have questions, let me know. Moving right on to part 2, strategies for making rational risk decisions under pressure. So pretty straightforward. Let's see in the chat. Someone said, that's the worst. I was $700 away from passing and broke my rules and lost way more than I needed to. So I feel what you said. Yeah, you're not alone in your feelings. That is so much more common than many of us would like to admit. I know in the beginning of my trading journey, that happened for months and months, and probably into a year, a good solid year of doing that, where I'd make good progress, and then in one day or 1 week, it's like all that progress disappears because of poor, truly, I think it boiled down to poor emotional responses to, or poor emotional control over it. And it may be subconscious for a lot of us. We're like, oh, well, I don't get angry at the markets or frustrated or want to revenge trade. Well, are you truly taking a moment to really feel your feelings when you're sitting in front of the computer? I don't believe you're just a robot making perfectly analytical decisions. So there are emotions at play, and you have to be aware of that stuff. So I feel what you're saying. Okay, part 2 has 4 parts to it. These should go by relatively quickly. We have reframing losses and gains. We have utilizing pre-commitment strategies, mindfulness and emotional regulation. That's a big one that we are alluding to. And probability-based decisions. Pretty straightforward stuff. This is the bread and butter of how to move through everything that we just talked about when it comes to prospect and anchoring and herd behavior. How do we combat those feelings and those effects on us? So, reframing losses and gains. Use cognitive reframing to focus on the overall investment strategy rather than individual losses or gains. This helps in seeing each trade as part of a broader plan rather than an isolated event. This is what I talked about earlier when we were talking about the prospect theory, how these perceived gains and losses or the perceived losses affect us more than the equal gains. And there's a reason behind it, because we have an emotional attachment to this stuff. And so if you're able to, again, broaden your perspective and really look at it at a, take yourself out of the moment and say, hey, my goal is for 2 months or 3 months or a month, whatever it might be. It gives you the ability to take yourself out of the trenches and be like, okay, well, this loss is actually expected. It's part of my plan. I was expecting to lose at some point during this 2-month journey, and that's okay. Like, I know that I was going to lose. Well, this is one of them. Now I'm just going to wait for another good setup, or I'm going to take a walk, or I'm going to try again tomorrow, whatever it might be. So it's a really powerful thing. And I know it sounds basic, but the fundamentals work, folks. And I encourage you guys to use that cognitive reframing to focus on the broader plan rather than, the isolated trade. So practical tip, reassess risk based on long-term goals rather than short-term market movements. Reframe losses as part of the learning process or as part of the risk involved in trading. So essentially what I just said. So utilizing pre-commitment strategies. So this is, again, we touched on it earlier, and said when we were talking about herd behavior, instead of jumping into a trade because everybody else is saying they're in long, you have to be able to go into a trade confident in utilizing your pre-commitment strategies. So predetermine your entry and exit points before placing trades to reduce emotional decision making. Again, it not only sets yourself up for success on a risk management level, but it also helps pull away from that emotional stress that you may feel during the trade. Because if you just jump into something with no plan, everything's going to get elevated. The cortisol, epinephrine, norepinephrine, your nervous system at its core is going to switch to sympathetic, and you're going to be in that high stress situation that you didn't intend to put yourself in, and all of a sudden you're making emotional decisions. So this includes setting stop losses and take profit levels based on risk tolerance and goals. Again, what I just said. So practical tip, decide on the percentage of capital you're willing to risk per trade in advance. So if you're on smaller accounts, you're going to have to leverage a little bit more of a percentage of the capital you have free. So if you had $100,000, you're able to utilize 2%, 1% or less of your capital per trade. But if you have a $2,500 or $1,500 drawdown, you're going to be using 5+% of per trade typically. So, and that's okay for those smaller accounts. Just be mindful, like, hey, have a plan that, I'm not willing to use more than 6% of my capital this trade, or 7, whatever it might be for your account. But if you start to break those rules, what other rules are going to stay disciplined to? Like, it's just a downhill cycle. If you sit, just like bringing it to a broader point here, if you tell yourself you're going to wake up at a certain time and then you don't wake up at that time, you hit the snooze button, you roll out of bed 45 minutes later, you said you were going to take a cold shower, but you didn't take that cold shower. Like, when you say you're going to do things and then you don't do one of them, it really starts to break down your entire plan as a whole. And the same thing happens when you get into the stock market, when you start trading. And I would say it's even more so here because there's money involved and because the emotions are typically attached at a higher level. A lot of things in the stock market become erotic. Unfortunately, it seems like we should be the most analytical when it comes to the trading market, but it seems like we're the most emotional when it comes to trading. So when you guys are trading, just have a plan and really stick to each one of your rules, because when you start to break one, you'll start to break others. So how do we deal with all this? You've been talking about, oh man, like how much emotion is involved in trading. And so here's some practical tips that I'm sure some of you who have been involved with my risk management classes before, my psychology classes, definitely know what we're getting here too. It has to do with breathing. So mindfulness and emotional regulation. So practice mindfulness techniques to manage stress and maintain rational decision-making during times of market volatility. Emotional regulation helps keep impulses impulsive reactions in check. So it's all alluding to what I've been talking about. Like we know that the market causes high emotions, whether that's fear or greed or revenge or a mix of everything, or disappointment and shame. Like a lot of really primal things that for us as humans start to boil up when you're in the stock market. And truly, like if you don't think about it, you may not be able to manage any of these emotions. But if you're being honest with yourself and you really start to pay attention to how you're feeling when you make trades and when you make mistakes, and how you react when you make really big gains and when you take bigger losses than you should have, you can start to tell that these emotions are real, and they're affecting all of us. So practical tips for how to regulate these emotions. Techniques like controlled breathing or a brief step away from the trading screen can help manage the fight or flight response and allow for more thoughtful risk assessment. So when I say fight or flight, a lot of you think it's just a term that I'm throwing out there. This is a well-documented scientific fact when it comes to how our autonomic nervous system reacts when cortisol is introduced to the bloodstream, and epinephrine and norepinephrine. I could go on and tell you, hey, you're actually moving into a fight or flight response when these emotions arise, unless you're able to maintain a level of cortisol and adrenaline in the bloodstream that is lower than your baseline. How do you do that? Well, a real practical tip on how to do that in real time is something called a physiological sigh. This physiological sigh, I know I'm not going to go in the rabbit hole, folks who have heard me talk about it before, but it is a tool that was put up against a couple dozen different a few of the most popular meditation techniques and a few of the most well-known breathing techniques. And the physiological sigh came out on top scientifically as the number one way to reduce stress, so cortisol, epinephrine, norepinephrine, adrenaline, in the bloodstream in real time, and also keep it that way for longer. So not only will you reduce the stress in real time, but throughout the day you'll feel less stressed, and you'll physically be less stressed. Your body will not have those chemicals. And so how do you do it? It is one long inhale through the nose, and then once your lungs are fully inflated, it's another sharp inhale through the nose to really inflate everything in your lungs. I forget what the little sacs in your lungs are called. Anyone in the health industry could probably remind me. It starts with an A. But anyway, so one long inhale through the nose, followed by another sharp inhale, and then one long exhale through the mouth until your lungs are fully deflated. And you can do that once, and that is proven to help lower cortisol, epinephrine, norepinephrine in your bloodstream right away. And it's also proven, if you continue to do it, to help with your mental health. Analytical data is showing that, or anecdotal data is showing that people are saying that I feel better overall. I feel less irritable. I'm more likely to be present with relationships in my life. It's really practical. So let me check the chat really quickly, folks. So breathing techniques help when you feel like you're in fight or flight. Yeah. And so in one, you could use that in any situation. So whether you're in traffic and you're feeling really irritable at the moment, or someone at the bar on the weekend, you're just trying to go out with your girl and have a nice drink, and someone's really starting to fluster you, whatever that might be. This is a real technique that will shift your autonomic nervous system from sympathetic to non or parasympathetic, which is that fight or flight, to the rest and digest, as they call it. And it also lowers all those bad chemicals I was just talking about in your bloodstream. It's a scientific proven way to help lower stress. And I could also tell you, like I've been mentioning, like I said, I wasn't going to go down the rabbit hole and look at me, but these emotions arise when you trade, whether you're aware of it or not. And your nervous system also switches over to that sympathetic, that fight or flight, whether you're aware of it or not. This buildup of cortisol in your bloodstream will trigger that. And so here's a practical tool: 2 inhales through the nose and 1 exhale through the mouth. You can in one breath, shift your nervous system over to the rest and digest and lower those levels of adrenaline and cortisol in your bloodstream. Do a couple of them if it makes you feel better. I do this when I'm trying to get to bed. When I feel a little stressed, I'll do it during the stream sometimes when I'm talking faster than I'm thinking, and it really helps me slow down. And so if you guys have not tried it, you guys should absolutely try it. How do you pronounce that again? I'm looking at it and I'm like, that seems like a pasta in the chat. Alveoli. I think that's what the sacs I was talking about in your lungs to fully inflate them. So again, briefly, one long inhale through the nose until your lungs are fully inflated, and then another sharp inhale through the nose, and then fully exhale throughout the mouth. Okay, folks, we're on our last point. Thanks for bearing with me so far, but that is such a good technique. I recommend it to all my friends in real life. I do it to my family. I do it to you guys. It's just something that has really positively changed my life on a real level, and it has also influenced how I trade. So you guys should definitely try it. Okay, last point, probability-based decisions. Evaluate the probability of various outcomes instead of focusing solely on potential gains or losses. This approach aligns with decision-making more closely with statistical risk assessment. So, practical tip. So use risk to reward ratio to determine if a trade is worthwhile. And we all know this. For example, if a trade offers a 3-to-1 risk to reward ratio, risking $100 for a potential of $300, it may be a favorable decision, even if the chances of success aren't guaranteed. So essentially what we're saying is make analytical decisions when it comes to the stock market. And we all know this, and this is kind of our plan going into it. But if we're not paying attention and we fall into that herd mentality and we're letting our emotions control our trades, we're not going to follow this probability-based decisions. That's why I threw it in here. I was debating it or not, but these are the fundamentals of what we need to stick to become consistently profitable traders. And that's the fact of the matter, guys. If we are not really disciplined when it comes to our fundamentals, any other trick of the trade is not going to work out, because you could have the best trading strategy in the world with the best risk management plan, but if you can't follow those rules and stay disciplined to them, what is all of it worth? It's not worth anything. So when you feel yourself getting stressed, try the physiological sigh, or go outside, get some sunlight, take a break. Understand that when those losses arise, please do yourself the favor, say, hey, take that perspective, step back and say, this is part of my overall plan for the month. I am expecting to lose trades, and that's okay. What I'm not going to do is let these emotions come up. I'm going to control my breathing. I'm going to go take a break, and I'm going to come back and make analytical, probability-based decisions. If you guys can stick to those fundamentals, it is much easier said than done, but you guys will see progress in real time throughout your trading career. So that's all I got for you guys today. I have one last closing statement. Understanding behavioral finance and implementing strategies to manage emotional responses to risk allows traders to make more rational decisions, improve their risk tolerance, and increase the likelihood of long-term success. There we have it, folks. I appreciate you guys joining up. Hopefully this, if it was not something you learned, hopefully this is just a good reminder for you to take a step back, focus not on your losses, but focus on the general plan. How am I supposed to get better over a long period of time? Well, I'm going to focus on those bigger goals. That's what I'm going to do. So if you guys have questions, I have answers. Let me know if you guys got any, but let's see. So breathing techniques, we already went over that. Yep, helps fight or flight. Switch to the parasympathetic. Yeah, it looks like that's it, folks. Again, there's a good reason we go over risk management. It's super fundamental to this stuff. If you guys have not seen my other classes, I also do psychology and the direct effects of psychology on your risk management plan and as trading as a whole. And I also have wellness classes going over your mental, physical, and spiritual health. Because again, like we were talking about earlier, everything you do in life is going to affect your trading career. How you do one thing is how you do everything. So if you're slipping up, if you're making big mistakes, if you're not staying disciplined to what you say you're going to do, it is going to be amplified with the emotions that come with trading. So do yourself the favor, do the hard thing, go eat healthily, go work out, go stay hydrated, improve and work on your relationships in your life. Go tell your loved ones that you love them. Go do the hard stuff, friends. So that's all I got for you. I really do appreciate you guys being in here, and I hope you guys have a fantastic day. Keep your accounts safe, keep yourself safe, and I'll catch you guys later.